How much uncertainty is there around this provisioning? How difficult is it to come up with a figure for provisioning, given the unprecedented situation we're in right now?
Good morning, and thank you for having me again. Well, of course, the situation is evolving quickly, so it's really difficult to predict outcomes with any certainty. And this is particularly true when assessing impact across multiple markets and regions. Remember that we operate in 10 different countries, and the crisis entering these countries at different stages. The crisis will hit these countries probably with different depths. So it's difficult to predict, but one thing is to us is clear is that our model, which is based on diversification, also will show its benefits this time around.
Indeed, so diversification helps. What about exposure to small and medium-sized businesses, SMEs? What are you seeing in your books at the moment for the survival rates of SMEs? What assumptions do you make about SMEs in Spain and across Europe?
Well, this is early days because we've increased lending to SMEs in April. For instance, in Spain, we've lent over around 10 billion in April, just April, 10 billion using the Spanish government program, another 10 billion outside the Spanish government program, and the Spanish government program guarantees 80% of the loan, and obviously we are lending under our traditional strict criteria. So it's very early days. We know there will be some deterioration in asset quality, but obviously because of these programs, probably we don't expect to see significant levels of non-performing loans, probably in any segment, really.
Okay, that's interesting. And in terms of the loan loss provisions, then, how do they break down? What areas of the business are you having to put more provisions in place for? Consumer finance, the subprime auto space in the US? Which are the bits that you're having to provide more for?
Well, the 1.6 billion is an overlay provision. It represents our best assessment at the end of the first quarter of the losses that will emerge through the crisis, although clearly we are still in uncharted territory. We haven't broken down. This is the provision at the end of March, so it was very early days, so it has not been broken down. Again, we need a bit more time to really have a clear idea of how the crisis will evolve, because again, by product, by country, based or not on government programs, the different guarantee levels will mean different behaviors. So we need to wait and see how this all unfolds.
I know that you operate in a lot of countries, Jose, obviously, but sticking with the Spanish or looking at the Spanish story and the loan process that you're going through there, are you asking for extra guarantees from those who want money, more guarantees than you would normally? Is the process different?
No, the government program is has very clear conditions. So the 10 billion that we've lent under the government program fully follows the rules of the Spanish government, and for the rest of the business, we are just operating normally. Obviously, the macroeconomic environment is becoming a bit tougher. We would expect unemployment rates to move up in Spain and elsewhere, and obviously we're adjusting our admission models to this new macroeconomic environment, but as we would have done in any other case.
Do you think the Spanish government is going to have to lend out more money to put a bigger pot at your disposal? I mean, 9% of GDP is the pot they've set aside right now. That seems to be less than Germany, Italy, France. Is the Spanish response lagging a little?
Well, I think before we think about adding more, I think what we need to do is actually put in the 100 billion to work. So far, only 40 billion of the 100 billion announced has been dispersed in two buckets of 20 billion each. So the next thing we need to make sure is that we free up another at least 20 billion because there is sufficient demand for additional funds right now. So before thinking about increasing the 100 billion, we need to make sure that we make good use of the 100 billion that has been announced.
We understand that the European Commission is looking at another round of capital relief. Just briefly, Jose, is that welcome?
Well, I think capital definitely helps, but in our case, we we have a very resilient capital base. In all stress tests that have been conducted by the EBA, the ECB, Santander always shows the lowest capital depletion amongst the largest European banks. This is not a paper crisis, this is a real crisis, and I think this time around we will show that our capital is much more resilient than the many other European banks.